Hello YouTube and welcome back to YFP, your final piece in your trading journey. Now guys, in today's video I will be explaining what order flow is and how we can use this to our advantage by combining it with liquidity. Now, just before we get into the video, I've literally created a free Discord where there's loads of info inside how to become a paid member and what that includes. So make sure you check that out. The link will be in the description box below. Now, have you ever found yourself taking basic mitigations to mitigations and finding yourself getting stopped out? Or have you found yourself taking a position from an order block and price moves away from your entry but returns to stop you out at break even at the best? Now, this is because, guys, price knows where the sheep are literally going to enter from. And as a trader, it's our job to seek liquidity within these entries, or your entries will have some sort of structure called liquidity sponsoring an order block, which makes them higher probability. Now, I'll show you my way of identifying a valid zone and what that looks like, and identifying where a shift of order flow has taken place. Now, just before we get into these steps, I want to show you things that you should already know. Okay, now these are points of interest. If you look at my screen now, what we can see is, let me just go up and find this. 2 seconds, perfect. Cool. So these are the 3 types of areas that I use to identify my points of interest on a higher time frame. So our first one is our breaker block. Now I'm just going to touch on these very briefly. Okay, our breaker block is this right here. So this last little pullback before price makes a new high to make a new low. Okay, so from a high, high, low, high, high, lower, low, prices return to make a lower high within that breaker block to continue lower prices. Within that breaker block, we want to see a characteristics of imbalance within that zone. Okay, so we want to see inefficiency, and we also want to see a clear change in the state of delivery. Okay, now for me, a order block, moving on to number 2, we need to have a build up of price before we see this sweep and then a shift to higher prices. Within that shift that broke that high, I want to see also a fair value gap, so a buy side inefficiency pool. I want to see that, and essentially I'm marking out that whole sell to buy zone, not just a random internal point. Within that range, I'm marking out the whole sell to buy before looking for my entry on a lower time frame. And finally, number 3 is our imbalance. Now, an imbalance is from the last high to the third candle's low. In between that area, we see pure buying activity going on. So the market doesn't want to have inefficiency, and what it will seek is a rebalance to make price efficient again, to then continue to make higher prices. Okay, now we've got those out of the way, we can move on to the video, because without those key foundational pieces of information, it won't be very clear on what we're looking at. Okay, so let's just go on this chart now. Now I'm going to hide the majority of price so we can do this step by step. So you can see that it's not hindsight and and this whole thought process is very logical in terms of narrative building. Okay, now step 1, we want to identify the most recent breaks of price. Okay, now from this from this swing high, we can see that price, if we follow it down, has broken this low. Okay, this wick here has broken lower than this low, therefore price has showed us a shift. Now step 1 is to identify that and draw a fib from the high to the low of that range. Okay, now what we can see here is we have 2 lines, obviously 4 including our high to our low, but in between that we have 2 lines, and this one here is our 50%, and this line here is our premium, which is 0.78. Now within that zone already, what can you guys see? We can see number 3 of our point of interest. We can see our imbalance here. Okay, now we can also see an order block right here that's sitting at, that is above 50% of this price range. So it would make sense if we also see a reaction from this area, or just see a full-on follow through to break new lows. Okay, now step 3, now we've identified where price should go. So we identify from this low, okay, for price to continue lower, right, we need to hit into these areas, and this is on an hourly time frame. Now we have a lot of room for price to lead up into that. So even though that bearish order flow, order flow has shifted to the bear side, it doesn't mean that we can't find bullish opportunities in the market leading up into a premium array where price will continue those shorts from. Okay, so to confirm that, what we need to see in step 3 now is where is the shift. So if we go on to a 15-minute now, because we can't see candles, we can't see structure that's clear on the hourly time frame. Okay, so as you can see here, price has made a low to a high, lower high to a lower low. Okay, so these are structure points, okay, in the market. Now, from this failure, you can see price didn't make a new low from this lower high. Okay, instead, we made a new high, and then price made a high low and a high high again. Okay, so as you can see already, price is already stacking order flow in our favored direction. Okay, we've anticipated that because price is broken out from the low, we should start seeing order flow push up into a premium array. Okay, as you can see, these lows are all holding now, so we sort of forming a order flow chain. Okay, now number 4, from here we want to see, obviously in a bullish price scenario, we want to see bearish candles act as resistance to continue distributing price higher towards the premium points of interest. So what we can see here is clearly that when this is quite choppy price action. Okay, so I would expect some of this price to actually get grabbed in the future, and probably maintain these lows or create equal lows or some sort of liquidity grab in this area, and then we'll play price going forward from there. Anyway, without that, if we're just playing this trend, we can see that if we're marking out, so this order block here that broke a high, we can see that price comes back into it, delivers a new high. Okay, so to the left, this whole zone broke out of this range. Okay, we then returned back to take out this liquidity, and then we came higher again. As price came higher, we was holding this last down candle as resistance before delivering higher prices. Again, what can we see here is simply we have this last down candle, right, before higher prices, and we can see that price comes into it, starts holding it as resistance, and gives you a fair enough pullback. Okay, now even though it didn't take out this high, as I said, usually when we have, like, this is on Friday, so this is definitely like an NFP as it's the first Friday of the month, we can see that price hunted all of this little liquidity that was sitting here, actually maintained this low, so it didn't actually break this low. Okay, we just took out all of the liquidity, and price took out a new high. So even from this moment in price now, guys, we are still framing bullish price. Now, why did we have this reaction? So you remember, guys, when we marked out this zone, right? So we marked out this buy to sell, right? That could give a reaction. And what did it do, guys? It pretty much gave a solid reaction, but didn't actually follow through to create a new low. Instead, we tested those lows and went on to break out a new high. Okay, so by following this now, our next zone that we could enter from potentially is from this fair value gap here. Why? Because the same concepts apply. If we're marking out from this low to this high, we can see that this is below equilibrium. Okay, so this fair value gap that you can see here is below equilibrium, so it can act as a solid demand pool where price can continue to create higher prices from. Okay, as you can see, this was a trade that I took, and price delivered higher prices to Asia high. I'm only trying to be in the market for 30 to 50 pips a day, guys. Like, as I'm intraday, I'm not looking for price swings. I just want to take my money and continue on with the day. So 4. Now, this is where it gets interesting. This is where, when you combine all of my concepts together, this is actually one of our variations of our reversal model that I've explained for free on YouTube. So it's one of the daily highs and daily lows in this instant model that takes out the previous daily low, reverts and delivers higher prices, breaks out of this whole range to deliver higher prices. So if you had that analogy and you had that narrative in play, this was a trade that you could actually swing, and it could give you a return of 26%. However, you would be silly to not take partials within this range. Okay, now again, we're following order flow. Okay, so from this last sell to buy that broke out from the structure, you can see price comes straight into that zone again, and it acts as resistance, and price then continues to go on to create further higher prices. However, in this instance, price has started to stall here. So do you remember on the higher time frame, okay, when we first started this, where is price actually reached into now? So price is actually respecting this high time frame imbalance as our resistance now. Okay, so price is bouncing off it and acting as resistance. Now, what we can see then is when we go back down into the 15-minute, is from this area now, as that tap has come into it, this demand zone was used to push price up there to retest this same zone on the higher time frame. Now, this is an entry model that I taught also that will teach you how to get in this exact trade, which is the same day external reversal model. And that is also on YouTube for free. So make sure you watch that video as you will know exactly how we got into this trade here. Okay, but as you can see now, in the next video, I'm going to show you how we can break down the next leg of price. As you can see, price from this high went on to deliver lower prices again. So I'll break down the whole scenario again on this brand new piece of price action that's leading up in these next few weeks. And I will show you why price has held these zones and my narrative within these areas in the next video. And I hope that video sort of helped you identify how to use order flow and combine models together to have a solid understanding and narrative of price, which will give you the edge over other traders that are entering early, which is perfect, right? Now, you have a solid way of marking out buy-side order flow and identifying how to get into these trades without obviously being an early seller or buyer. Use these steps to ensure narrative is literally built up correctly to allow you to follow the right side of price, okay? Now, as usual, guys, if you're enjoying the video so far, show some love, guys, and click on that subscribe button and give the video a little like. It will really help the algorithm push my videos, guys. So thank you in advance, and I'll catch you in the next one. Peace.